We're back, lending in the Pacific Northwest. I'm Paul Thompson.
Rebecca.
This is Rebecca Cruz and
Peanut.
And we have Peanut. We're all back. So this time we're going to talk about the right program for first-time home buyers. And correct me if I'm wrong, but I've noticed just from feedback from people that a lot of first-time home buyers, if they're working with another lender, they'll just automatically suggest FHA.
Right.
To them.
Yeah. Yep.
And
I've seen that a lot.
What do you think that is? Do you think that lender is just being lazy and just not taking the time to give them options, or are they inexperienced and just assuming that just because they're first-time home buyers, they should go FHA? What do you think it is?
I think conventional, the rates seem to be higher,
Yeah.
and because, a lot of consumers just look at the rates.
Right.
And if, a rate on, FHAs in the 5s and you've got a conventional loan in the 6s, automatically they're going to, package it up pretty and show you, here's your option with FHA, but not looking at the whole scenario or everything as far as the mortgage insurance and everything else that comes into play.
That's a really good point. And I think people are so obsessed with rate.
Right.
They just automatically think a higher rate is a worse program for them, and that's just a bad thing. And I'll kind of touch on what happened to me last weekend when I was doing a homebuyer class.
Saying that.
And we were talking to these first-time home buyers. They were already working, so I do homebuyer education. And this buyer, or this person that was in the class, already had a lender that she was working with. They were already in contract. And I started talking about conventional versus FHA. And I was explaining the pros and cons and why conventional might work better. And she stops me. She goes, wait a minute. You mean to tell me I could go conventional? I said, well, yeah. She's like, my lender never even gave that as an option. I said, really? And I said, if you don't mind me asking, is your credit? She's like, oh, my credit is like 760. And I flat out told her, I said, listen, I can't speak for this lender, but I can tell you this right now. If your credit score is above 700, you're a first-time home buyer and you're doing the minimum down payment, you're actually better off going conventional despite the higher interest rate. And I explained why. And if you want to touch on that as to why it would work better with the higher rate if you're above 700 going conventional.
Yeah, so if you are above 700, it's most likely your best option is going to be conventional because the mortgage insurance is based off of your credit score. So because of that, you'll get a lower mortgage premium rate. It'll be less, and even though the interest rate is a bit higher, if you compare the two, usually you're going to get a better payment overall going conventional. And then knowing that, hopefully in a couple of years or once you get to the loan to value of 80%, you can request to have that mortgage insurance dropped versus FHA, you can't do that. It's for the life of the loan. Yeah,
that's a key element right there. Mortgage insurance stays on your loan forever on an FHA. The only way you can get out of it is you refinance or you sell your home.
Right.
Conventional, you can get rid of it once you get to a certain equity position. You can apply to have it removed without having to refinance. And that part of your payment just goes away. So that alone right there makes conventional a great option.
So what would be the reason that we would go FHA and not conventional, and it would benefit the borrower?
Yeah, so with FHA, where it would make more sense would be if your credit score, if you're doing minimum down payment and your credit score was lower than 700, the math probably works out better to go FHA. The reason being is the mortgage insurance premium on FHA is the same. It's a flat amount, no matter what your credit score is, no matter what your down payment is. Everybody pays the same monthly MI premium on FHA. And the math just works out to where when you're below 700, that premium's gonna be lower than that premium's gonna be for conventional. Because remember, conventional premiums are determined by your credit score and your down payment. So payment-wise, it's going to be higher if you're below 700 going conventional rather than FHA.
Right. And having a higher debt to income ratio too, right?
Yes, and debt to income ratio. So debt to income ratio is your new house payment and your total monthly debts on all your other minimum payments on all your monthly debts in proportion to your gross monthly qualifying income. Conventional, you can go up to 50% usually, debt to income ratio, back end ratio, which is house payment plus debts. FHA, we've seen them as high as
57.
We've seen them as high as 57%. You might be thinking, oh my, 57%? How are these people even able to make their house payment?
Right.
Why would you even, in good conscience, even offer that to somebody? And I would say, has there been people that have gone FHA at that high a debt ratio? Yes. And the reason being is sometimes there's income that is there, but we can't use for qualifying.
Yeah, for example, you'll have people, doing side hustles like DoorDash or Uber, and because they haven't been at that second position for 2 years, we can't count it into the ratios. Or family members that also that will be contributing to the household income, but we cannot count it because they're not on the loan. So situations like that.
Yeah, we get that all the time. We have people will say, oh, well, my friend or my grandmother's going to be living with me paying $300 a month in rent. Can we count that income? And we can't.
Right.
But the income's there. That would be justification for, okay, let's go FHA for these people.
Right.
Because they can't go conventional if their debt to income's above 50. So that's when it would make sense to go FHA. And again, if their credit score's below 700. The point to all this is it's not a one size fits all. Mm-hmm. And you have to ask yourself, if you have a high credit score and a lender is, and your first time home buyer is just pushing FHA and not even talking about conventional, you got to ask why they're doing that.
Yeah, and I would say I want to see both scenarios. Like, show me what the payment would be and the interest on FHA versus conventional, and let me compare the two.
Right. I think people just default, a lot of inexperienced loan officers especially, they default to FHA and just assume, oh, you're a first-time home buyer, you're going to go FHA. No, every situation is different. Higher credit score, absolutely, conventional is going to be a stronger option for you. As long as we keep the debt to income under 50%.
Right.
So if you found this helpful, if you like our content, feel free to like, subscribe, and share this video. And if you have any questions at all about this scenario or other scenarios, please reach out to us. I'm Paul Thompson.
Rebecca.
And Peanut.
I'm Peanut.
And thank you for watching.
Thank you.